I will wait for I will wait for another uh 30 seconds for the guests to join, and then we shall start our webinar. Good afternoon, everyone. Welcome to our webinar on structuring of Angel Fund in Gift City. I am Jaya Agarwal, an associate with India Juris, and the moderator for today's session. On behalf of India Juris, I extend a warm welcome to all the participants and our esteemed panelists for the session. Thank you for taking out the time and joining us today. A brief background of India Juris. We are a leading full service law firm with a strong presence in India as well as global market. We have consistently been ranked number one in private equity and venture capital transactions by Venture Intelligence Report. We have offices pan India in cities like Delhi, Gurgaon, Mumbai, Bangalore, and Gift City. This webinar is a part of an initiative taken up by India Juris, where we have been dedicated to disseminating information on Gift City through our monthly webinars since April 2022. We are pleased to welcome to the panel Mr. Samir Rastogi, the managing partner of India Juris. He has been in practice for over 25 years and has vast experience in a variety of domestic as well as global matters. Our next speaker to the panel is Mr. Shivram Ganeshan, Associate Partner at India Juris. He has rich experience of corporate law, foreign exchange law, M&A, corporate restructuring, capital markets, etc. He has an experience of over a decade and he regularly appears in various courts and tribunals. I would now request Mr. Samir Rastogi to please formally welcome all our esteemed panelists and take the session forward. Over to you, sir.
Thank you, Jaya. It's always been a pleasure to be part of such webinar on Gift City, where we are talking about setting up funds, structuring of funds, and various other PMS or global in-house centers in Gift City. Everybody must be knowing that. Those who are new, to them I'll tell that it's located in Gujarat, Gandhinagar. So it's around 20-25 minutes from the airport. You get down from the airport directly, can go to Gift City. So this is basically this effort of Government of India has been to give the boost to the Indian economy. And today our webinar is concentrated on the angel funds in Gift City. So when we are talking about angel fund in Gift City, so I think I'm told that this webinar is being attended from people all over India, and the participant include the people who want to set up or do something in Gift City. So some from the law firms background, other law firms who would like to understand about the nuances of Gift City, how it works, and how the funds are being made over there, and some potential clients who would like to know more about it. So today, friends, we are going to discuss about structuring of angel funds in Gift City. And I'll be sharing on the legal aspects and operational aspects. And then partner Shivram would be talking about the procedural part of it, the compliance part of it, which is very, very important when you are working in Gift City. So without any further time, let me just put my presentation to you all so that we can take it off. I think I can, give me a time to just let me share my screen. Where is it? I think my screen is visible to all of you. So friends, first of all, today we'll be delving upon structuring of angel funds in Gift City. So those who are new, and because there are a lot of people in India and abroad who would like to do something, but many a times they don't know what to do and how to do. So when we are talking of angel fund, so those who are at present working either as a PMS or doing structured or syndicate deals or doing individual deals. So if you all have investors from outside India, then it is for you, where you can make a fund in Gift City, get your foreign angel investors or get pooled money in GIFT City, and then from there you can invest anywhere in the world and in India. So that's very easy, very fluent over there. But you cannot set up a fund, invest money from India and then invest back to India. So that is not permitted. So it is very important for the people to understand when and who should set up what objective you want to meet. That should be clear, and then you can go for it. So here angel fund, we are primarily looking at those people who have investors, angel investors from outside India, who would like to invest in India or other places globally, anywhere. So we are looking at that kind of investment structure here. In angel fund, you do deal by deal transaction. I mean, it is a deal. For every deal, you can have different set of investors. Let's go ahead with the angel fund. So first of all, friends, the basic thing to know about is the regulatory landscape. What are the main law? What are the main regulations which govern uh, angel fund in GIFT City? So in GIFT City, we have IFSCA. IFSCA stands for International Financial Service Center Authority Fund Management Regulations 2025. So initially these regulations were notified in 2022, April 2022. So in 25 recently this has been updated, and that's why it is written IFSCA Fund FME Regulations 2025. And since then the regulator is very proactive, very understand. So they have been, based on the market requirement, the participants requirement, they have been modifying the regulations, coming up with different circulars from time to time. So the present circular is the latest one. The regulations are updated in February 2025. So this is the mother regulation of all the funds operating in GIFT City. So FME regulations, those who are interested, they may just log in, Google it out and go to IFSC website, and they can have the detailed information about this. So this is basically a fund, how to set up a fund and everything about the fund. And specifically, angel fund framework has been given by the IFSCA in their circular dated July 1st, 2022. So this FME regulation and this angel fund framework circular, together they make the whole law at present for the operation, setting up, structuring and operation of angel fund in GIFT City. So both these documents you will get on the website of IFSCA. So going further, the FME regulations, to understand FME regulation broadly, they are, we can broadly distribute them in three parts. First part talks about fund management entity, which is in India, when we make a private equity fund or any fund, an angel fund, so we have a fund manager. So similarly, it is named as fund management entity. So there one part we can say it deals with the fund management entity, how to set up, what is the role, regulation, restriction, investments, and all those things. That is one part of it. Second part is schemes. Schemes, you can call it fund also. So one is fund managers, and then scheme is fund. So what type of fund managers are permitted in GIFT City? It talks about that. What kind of funds are permitted in GIFT City? It talks about that. And others, like how to say about PMS, portfolio management services, investment trust, FIF, family investment trusts. So these are separate topics we have dealt in our earlier webinars also. Those who are interested, they can log on to our website and get all these detailed webinars on these topics. So to just for the audience to understand, the fund manager entity, there are three types of FMEs. Fund manager, I'm calling in short as FME. So the starting FME is authorized FME. Then the next upper version is registered FME non-retail, and the topmost FME is registered FME retail. So authorized FME can launch category 1 fund, Cat 1 fund, which includes angel fund also. So at today we are dealing with angel fund, so we'll talk about authorized FME. And registered FME and the FME written at second and third number, both of them can launch angel funds. But the minimum requirement to launch an angel fund for the fund manager is it has to be authorized FME. So we more concentrate on authorized FME. And as far as funds, so there are three types of funds which are there in the provided in the regulation, which is venture capital schemes, which means which is equivalent to Cat 1 fund and which includes angel fund. And category 2 is restricted schemes, non-retail, which is Cat 1 and Cat 3 fund. And retail schemes, you have mutual funds and all those things. So these kind of broad lines are provided in the regulations. So it is just a broad overview to understand how the regulations are distributed. So if you want to basically set up an angel fund, the basic requirement is first you have to set up an authorized FME, number one, which is written over here. Let's move forward on that. So what is angel fund? Angel fund is a subcategory of venture capital scheme. If you see, I mentioned venture capital scheme at number one. So angel fund is in the venture capital scheme one of category of that. Hmm. And it raises funds exclusively from angel investors and make investment in accordance with the provision of angel fund framework. Angel fund framework is the circular which I just spoke in the on the first slide. So where it invest in early stage VC. So this fund can angel, if you are setting up a fund, it can invest in two things. One is VC, venture capital undertaking, and other is other angel funds, either in Gift City or India or any in foreign jurisdiction. If they are angel funds, so it can invest in the units of those angel funds or in a VCU. So suppose if you have selected a startup in Singapore, you have investors from India or across the globe, you make an angel fund in Gift City, collect the money, pool the money in and that portfolio, segregated portfolio, you can invest in the Singapore entity. So that's how it works for that particular transaction. Next startup you choose, for example, you choose in, let's say in US. Then again, for US, you have a different set of investors, onboard them as per the provisions, pull in the money and that portfolio you again invest in the US. So that's how it goes, deal by deal with the consent of the investors. So each investment is structured through a segregated portfolio with separate classes of unit. So whenever you do a particular transaction, so that is a segregated portfolio scheme and the units of that scheme is given to those investors. And in the startup or the VCU, the money goes in the name of the fund. So this gives you more leverage, more freedom to structure a deal, to have different set of investors in different deal from all over the world. Where there are various benefits to Gift City. You don't need require a PAN number from the foreign investors. It's easy to bring in money. It's easy to uh, take out the money. Mm. So all those benefits are there. You have even if in India, if you have a angel fund in domestic area, which is regulated by SEBI, and if angel fund has to in Indian angel fund has to invest, for example, to a Singapore or any foreign entity, so it before you invest, it requires approval from SEBI, and then only the fund can invest outside. But here that is not the case. If you have collected the no permission is required from IFSCA, it is meant for that purpose. You have the money, you invest anywhere. So that is one of the greatest benefit. So this is a broad structure of an angel fund in IFSC. IFSC is International Financial Service Center. So this is the broad structure. It is same as you do have in India, but so you can have an angel fund, wherein one side is your FME fund management entity, which will you have an angel fund in the form of a trust company or LLP. So you have a trustee. So trustee would have an agreement with the fund and the fund management entity would have an agreement with the fund for a fee. And the investor in the fund can be from foreign investors outside India and within India. But within India, if the investors are from India, then the money cannot be invested back in India. and you have to follow, and the Indian investor has to follow the LRS and other is FEMA and all those things. So once this is the broad structure and where the money can be invested, it can be invested in venture capital undertakings. These venture capital undertaking can be anywhere in the world. It can be in GIFT City, it can be in India. But if the VC is in India, then you have to see that round tripping is not there, and the Indian investors are following their FEMA LRS scheme. And it can invest in other angel funds set up in IFSC India or foreign. So all the investors who put money in angel fund, they would be entering into a contribution agreement with the fund. And this is how the broad structure of an angel fund would be is there. This is for understanding. So you can have a broad idea of how the structure, how the things would take place. Moving forward, so once we have set up an angel fund, this is the structure. So what documentation is required? What the main documents? So whoever is going to make or structure the document, because when we say structuring means all the documents which are here, they have to be very articulately crafted and drafted. So one of the main documents which we will see, that is private placement, which is the soul and heart of any fund, which talks about what policies you are going to adopt, what investment strategy you are going to adopt, what kind of units you will be issuing to the investor. All those things are there. What kind of returns you are going to give them, how much hurdle rate you are going to. So all those, whatever uh, operation and everything of your fund is there, that is the part of the PPM. So private placement memorandum, this is the major document which is drafted by a law firm like us or any other consultant or person whom you may hire. Other is other is contribution agreement. This agreement is detailing about the investment or investment commitment by the investor in the fund. So basically, it is an agreement, but contribution agreement is an agreement between the investor and the fund. Another document you will come across is the trust deed. So in this, if you see the angel fund, so angel fund is set up as a trust. So the trust deed of this fund is one of the critical document. So that has to be made, because in that you will be writing the life, the fund, and various other things. So you have to be very meticulous on that. Trustee agreement. Here, if you see, this is the trustee, and the trustee would enter into an agreement with the fund for providing trusteeship services, and the fund will pay a fee to that. So that agreement has to be in place. These are pretty standard. And investment management agreement. So if you see this FME provides in management services, and it pays fees to me. So this particular agreement would be providing, it is between the fund and the investment manager, that how much fees I would be charging. And then you have to see that your investment management agreement and the PPM are aligned together, because whatever fees, expenses you are charging, that should not contradict with your PPM. So these are the basic documents which would, there will be very other, when you are setting up a fund, there will be various other things, but these are the major things which you come across when you draft or set up a fund. So as I said earlier, where it can invest, so you have set up an angel fund. So now you want to know where I can invest. So it can invest in venture capital undertaking, wherever it should fall in this category, like it should be incorporated within 10 years of the investment. Means the date of incorporation of the company should not be more than 10 years. The company can be located anywhere. As I said, it can be in India, it can be in GIFT City, it can be anywhere in the world. So you have to be careful on the AML and CFT policy. And I think while accepting investors or onboarding investors, you have to see, the bank would see rather, that the investors are not from are cleared from FATF and all those things. So another, this annual turnover should be less than USD 20 million. Since incorporation, they should not have exceeded 20 million turnover. So many a times, sometime clients, because the company has already crossed 20 million or about to cross the 20 million. So the day you make an investment, it should not have crossed 20 million. That is the thing. It may, after your investment, it may exceed 20 million. That's a different thing. But at the time of investment, it should not. Hmm. It should be engaged in innovation or development or improvement of product services. It should not belong to an industrial group with turnover exceeding 50 million. So these are the, so when you are selecting any startup or any company where your angel fund would invest, so the company where this fund is going to invest, that company should meet these criteria. It is very important when a fund is investing, you should, you should, how you would ensure that this is there. So you should do the fund when they are investing, they should do their due diligence and should have appropriate documentation in place. Suppose tomorrow there is an audit of your fund and regulator asks, how do you know that this company was 10-year-old? How do you know the turnover was? How did you ensure that the turnover did not exceed 20 million? So what you can do when you are investing, you can have some their accounts or something as an evidence to you with you that it is the turnover is this. You can have a certificate of incorporation which proves that this it is in. So all those kind of precautions you have to take when you are investing, because if there is any audit or there is any check or any clarification from the investor, from the regulator, you should be able to show and prove that all those things. One is venture capital undertaking, other is other angel fund set up in IFSC India or foreign. So suppose you are an angel fund and there is another angel fund in GIFT City or India or foreign, and you are not getting any good startup or any company to invest, but still you want to invest. And if you find that another fund in GIFT City is doing exit well and they are getting good start, so you can invest in that fund also. So that is so you become an investor in the other. So that is how these things are permitted for an angel fund. So when you are designing that I want to set up an angel fund, you should bear all these things in mind that this is how I would be going. So now FME for angel fund. If you remember, I will just go back to the slide to show you. You remember I said that there are three type of FMEs in the FME regulation. One is authorized FME, registered FME, and non-retail and registered FME retail. So the basic, because nobody would like to, because as you go upward, the cost, the net worth, the compliances, the requirements increases very much. So nobody, if somebody wants to launch an angel fund, nobody would advise you to set up a second or third FME. So that's why for FME, for angel fund, I am, or it is suggested, or the one would set up definitely an authorized FME. So the FME for angel fund, the type should be authorized FME. You can set up higher category of FME. Suppose tomorrow you want to, so once you have set up the FME, it can launch n number of funds. So suppose today you have launched authorized FME and you have launched, so with this authorized FME, you can launch angel fund, you can launch category 1 fund. But tomorrow, for example, you want to launch category 2 and cat 3 fund also. Then there is a provision where you can upgrade your FME to the higher ones. So till the time you are doing only angel fund, it is advisable you keep yourself to authorized FME. So what should be the form of the FME? It can be a company, it can be an LLP, or it can be a branch. So company means you can set up you can set up a company within GIFT City and a LLP in GIFT City, a fresh company or a branch. When I say branch can be in the company can be in India or outside India, anywhere. But the requirement is that company should be regulated in that jurisdiction. For example, if you have any private limited company in India, it cannot be authorized, it cannot qualify as a branch in GIFT City. But if you are already an investment manager of a fund in GIFT City, the investment manager or any entity which is investment manager to SEBI registered fund, that can qualify, they can have a branch in GIFT City. Suppose if there is any already another investment manager registered or regulated in the Singapore or any other jurisdiction, they can open a branch in GIFT City as an authorized FME. So the requirement, if you are a branch, you should be regulated in your own jurisdiction. So all entities which are operating in GIFT City, they are called regulated entity because each and every unit gets a license from the regulator. Even India Juris Law Firm, our office, we are also regulated entity in GIFT City because we have got a license to operate in GIFT City from the regulator. So here you can see whatever is your convenient to you, you can have a company, LLP or a branch. So there is a net worth requirement, means this net worth is required to be, and it has to be maintained all the times till you operate in GIFT City. So $75,000 is means the money has, you should have a paid up capital or account or this much money in the account of the FME in GIFT City. So $75,000, this is the lowest. If you go the higher next level, it would be it would be more. And then you go, it goes up to $500,000 net worth. So this is the lowest. So $75,000 you have to maintain at all times. And if at all, for example, today you have $75,000 and sometime you go below it, or your net worth goes below 75, then you will not be allowed to onboard new investors or launch any other scheme till you are back on $75,000. So that you have to make sure that when you are operating, your net worth should not be below $75,000 at any point of view and at any point of time. Next question is physical presence in GIFT City. So now many of the, there are various foreign jurisdiction where people set up their fund, they don't go, they don't pick people. But in IFSC in GIFT City, if you want to set up an angel fund, you have to be physically present. You have to have a physical office there. You have to get your GST registration. You have to get your other registration done. You have to have some people over there. You cannot be a virtually present in GIFT City. That is, so this is a cost when you are physically. So when you are setting up or structuring your thing, you should know that I have to be physically. I put some people in physical, and that would involve certain cost. Minimum employee, the regulation talks about you need at least one principal officer with 5-year relevant experience. It doesn't talk about what it should be relevant experience. Earlier, this 5-year was not there. It has recently come. So now you know that if you want to set up an angel fund in GIFT City, you have to have a physical office in place and you have to have minimum one principal officer sitting in GIFT City. It's not that if the person has to sit 9 to 10 every day, you can have some days off or something, but primarily he or she should be stationed in GIFT City. Launch of schemes. When I say scheme, you can consider it as a fund. So launch of fund. So for launching a fund, for example, you have already set up a FME, your all registrations are done, and then you are ready to launch a angel fund or category fund. So if you want to launch an angel fund, so the PPM, as I said, then you have to file the PPM with the authority of the angel fund. Once the PPM is filed and everything is okay, your fund is launched and you are get set, good to go. FME contribution. Now, net worth. So you should not confuse between the net worth and contribution. So net worth is the what this much of money, this much worth should be there in FME, and FME contribution means suppose whatever is the target corpus. Suppose if you put, let us say, 20 million angel fund. If you are putting a 20 million angel fund, then 2.5% of the target corpus. So 2.5% of 20 million or USD 20,000, whichever is less. That much of contribution is required to be put by the investment manager in various startups or portfolio startups wherever you are funding. So now the question is whether this $75,000, whether it can be used in making my contribution to the fund. The answer is yes. The contribution required in FIV may be waived by the investors. In case of angel fund only, if majority of your more than two-thirds of the investors, if they say that okay, you may not invest in the startup as a contribution, then this can be waived off. Otherwise, you have to do this. So this is the basically you get this kind of FME, and this is all about FME. So when you are talking about angel fund, you should know that I have to set up an authorized FME first, and for this all these things are required. Hmm. Highlights of angel fund. So now your FME is set up. Now you want to launch an angel fund. So this was about investment manager, what it is, how much, and all those things. And this is about, sorry, and this is about the angel fund launched by that FME. So the angel fund which the authorized FME will launch. So this is some details about it, which is very essential for you to know to structure it. So what should be the legal structure of the scheme or the angel fund? So there are two things. One we talked about here, the structure of form or the structure of the FME, that was company, LLP or branch. So what can be the legal structure of the fund? Company, LLP or trust. Okay. Mostly, I would say majority, I would say 99 out of 100 would be in the form of trust because of its pass-through structure and functionality. So trust, globally trusts are used as a vehicle for holding the funds. So the legal structure, whenever you set up, it would be a trust only, mostly. But it permits company and LLP. You have to see the tax efficiency and accordingly you can decide upon. What is the minimum corpus? So now the first question is how small is fund I can make? Many questions we get from potential people. So the minimum corpus you can go for an angel fund is USD 1 million. And maximum it is USD 200 million for any VCF. So now here, now the question is, should I set up for 1 million fund? So now here one has to see if you set up a small fund like 1 million, 2 million, 5 million, you would not be able to, it would not make a commercial sense. So if somebody is making an angel fund, in my view, or any kind of fund in Gift City, you should make little big fund so that the corpus should be big and you should think little bigger because the costing, the operational cost and everything you have to, take out of that. So 1 million would be too low if you want to set up a 1 million fund. 1 million is 7 to 8 crores, which is nothing. So this is the minimum, but if you are able to work around it, well and good. If you can increase the corpus also later on if you want. So that is, but to tell you the fee paid to the regulator or any other expenses is totally has no bearing on the corpus what you want. You can if the costing would be the same if you make a 50 million fund, the costing would be the same if you make 1 million fund. It's that way. So what should be so now the type of the fund, it is close-ended, means you have to define the life of the fund, 5 year, 10 years, whatever it is. So it is of angel funds are close-ended. So maximum, how many investors are permitted? So in a particular startup funding, like for one deal, you have to have a minimum, maximum you can have a 200 investors. So in one, so generally nobody has 200 investors, but that is a good number of amount provided. For each startup investment, you should have less than 200 investors. Okay. Together, all in, suppose in over the lifespan of the angel fund, you have invested in 20 startups. So you can have 20 into 200 like that. But each startup funding should not be less more than 200 investors per portfolio scheme. So now you have set up your FME, you have set up our fund. So there is a provision for first close. So first close you have to do within 12 months of the PPM approval. So once you get the approval, you are on, then within 12 months you have to do a first close. First close means you have to get a commitment letter from the investors and all those things. So which is minimum, whatever is the minimum corpus allowed in the law, you have to do, which is provided in regulation. So USD 1 million is the, so within 12 months, you have to do a first close of USD 1 million. So what is, so now you are onboarding the investors. The investor would say how much money I have to put. So if the person is an accredited investors, So there is no limit. He can put any amount. But if the person is not an accredited investor, then over a period of 5 years, the person has to commit USD 40,000. For example, he will give you a contribution letter to you, contribution agreement that okay, I will invest $40,000 over a period of 5 years. In a particular portfolio transaction, I am investing only $5,000. That's okay. So another startup he will add, so like that. It goes that way. So valuation frequency. So when you are operating as a fund, every year you have to get the NAV of the units, you have to have a valuation frequency. So the startups which are far away from you, you need to have their valuation and then only your NAV will come. So these costs are involved in getting the valuation of that. Sometimes you will not get the valuation or documentation to the valuation for that company. So how to do the valuation? So when you are deciding upon the expenses to be charged to the investor or to anybody, you should see all these expenses would come to you. So valuation for every year you have to do the valuation of your portfolio, which will in turn give the NAV of your units. So leverage is not permitted in any kind of loan or anything you cannot do in angel scheme. So there is a provision of custodian. If your asset under management is above USD 70 million, then it is compulsory. Otherwise, it is not compulsory. But even if you want at a lesser, you can do that. It is a good practice. Tenure minimum you have to have a 3 year. It can be 3 years and it can be extended up to 2 years with the consent of two-third investors. So this is the broad highlight of the angel fund. What should be the life? What should be the will be the investors and what is the corpus required? What is the skin in the game? Skin in the game, which I just said that you have to invest. Here it was FME contribution. That is skin in the game. If it is waived by the investors, it can be waived. So friend, we just saw about the FME, we saw the things about the fund, we saw the regulations. So this was the whole snapshot on the angel fund. I haven't covered category one, VCF, venture capital schemes, and category two and three and other FMEs. So they are a big presentation part of it. If you want to learn about them, you can go to website and our website and you will find full details about all kind of funds and all kind of schemes. So I think, and further, when you are adopted, when you are you have made the fund, I think Shiv will capture the policies detailed in this presentation. So these are the certain policies which a fund has to make. FME has to ensure that these policies are observed and made, and you get audit and observations from the regulator also upon your policies. Sometimes people draft PPM and they copy from ChatGPT or they take some fancy PPM from here and there and put without reading they put and submit. And afterwards they discover that they have put so many things which they will never be doing. And if you put so many things which you will never do, then the definitely regulator will ask you, show me as per PPM you were supposed to do the you haven't done, then you are in violation of your PPM. So one should be very, should um, avoid just copying PPM from here and there. They should see what is their requirement, what they should be doing. You have to keep in the PPM what is required under FME regulations and what you want to do. More than that, there is no requirement. So please don't copy PPM from there. See your requirements and law, and then only you draft it according to you. So these are the policies you can see: valuation, conflict of interest. The 12th one, business continuity plan, is very important. All are important, but just to so it remembers you. So as may be applicable depending upon the PPA. So friends, this was all about the fund. This was all about the angel fund, which we just saw. And I hope you would have some broad information about this particular fund. And over to you, Jay. I think we will have question and answers later on, and we can we can go with Shiv. Thank you. Over to Jay.
I would invite Ganeshan sir to kindly speak a few words on this, and then we can take questions if anybody has. So I would request the members to write their questions in the chat box.
Thanks, Shreya. Please let me know if the PPT is visible.
Yes, sir, it is visible.
Thank you. Good evening to
Put on the
everyone.
presentation mode also. Shiv, you can put on presentation mode.
Sure.
It's good.
Good evening to
Yeah.
everyone. At the outset, as Samiji has already covered the structuring of the AIFs at GIFT City, which we formerly known as the FME regulations, where the fund managers and the entities would get incorporated. Let me continue ahead with the key consideration from the perspective of the operational and the compliance thereof. In order to have the skin in the game, as Mr. Samir already had deliberated upon, it is very important to understand what to build. So therefore, what we have made an acronym of build is to have a blueprint first, read the regulation first, read your PPM properly, then make the compliance and understanding thereof, which stands as you. The institutional integrity, that is what the IFFC wants, that you do not make pitfalls in the regulations, make some carve-outs, and then get penalized. So the institutional integrity is also required to be maintained. How legally soundness you're going to keep it, that would stand as L. And last is to make that ecosystem as a driven growth, as the one of the best institution across the world. Therefore, it is important to understand how to make the world build in the ecosystem. Continuing ahead with the build, what would you see as to make the regulations in terms of the FME regulations, FM regulations? What are the applicable other laws which will require to be adhered by the entity or the investment manager who is located at the gift city? And since it's in the SEZ zone, so the compliances of the SEZ Act 2005 will also be required. We'll just deep dive in all the regulations at the primary level, rather getting into a detailed discussion therein. But it is important to have a clarity on what regulations would you will be required to be done. So starting with the FM regulation, uh, since it's mandatory now, earlier it had to be as a physical filing was supposed to happen. Now we have the SWIFT mechanism where you will be doing the single window system mechanism where you will be also getting your approval of the SEZ as well as the IFC authorities as a combined one. Earlier it used to happen as first you get your SEZ entity getting the BLUT first registered, and then you incorporate the company, and then you get the registration. Now it's all simultaneously. The screenshot and the source have already been placed for everyone's reference. There's also a FAQ which the regulator has given how to go ahead in that. Just to start with it is you will have to create 3 IDs first. Once you create the IDs, you will be able to access the system. Once you access the system, you will have the dashboard which will coming into for the SWIFT mechanism, wherein you will be filing your CAF form, that is the common application form, under the FME regulations. Once you have about 3 parts of that, that is part A, part B, and part C. You will have to fill in the details therein. It's an e-based form. So make sure that you're not making any mistake or not providing the necessary documents. Every document which you will be putting therein would be mandatory. So you will have to make that there's no spelling mistake saying that Shivaram's spelling is wrong and your PAN card is not getting verified. The system will not allow you to do that. So therefore, you will have to make sure your KYC documents, which you are going to self-attest and upload it later on as an attachment, would require the exact same spellings. So that thing is very important to note for anyone who is going to make this application there. Once you finish reviewing, filling the forms, reviewing it, you will have a mechanism to do it by way of an e-signature, which will require you to do as what you do it in the MCA or in any other regulators. So once you get that thing in place, you will file this form. It will be reviewed. If all the documents which has been filed is correctly been filled with all the declarations as per the regulation has been done properly, you will be proceeding second to your GST registration. Once you get your GST registration as well, you're good to go ahead with the further compliances which is required. So as many of the people would be aware that since you are in the SEZ zone, you will have to get the approvals from the SEZ. In this itself, you will be getting all that approvals. So once you get this done, you will be following with your lease deed registrations. And once you get your lease deed registration, you will get your LOA. That is the letter of approval. Coming after that, the entities have been incorporated and everything has happened. Under the FM regulation, what is the compliance requirement? The first compliance requirement, what you call it as a CTR in the domestic side, it is to be filed with the regulator. At the moment, it's an Excel sheet along with a declaration in the Word file to be converted into a PDF. On the letterhead is required to be submitted as a compliance report. This is to be submitted to the IFSC authority within, it's quarterly based compliance, within 21 days from the date of ending quarters, that is April, June, September, and December. And that is 21 days later. So it will come as May 21, July 21, October 21, and January 21. There is no leverage that if you have failed not to make it within the 21 days, there's no extension. So therefore, it is important that people should do it exactly before 21 or on the date of 21. So not after 21. That would be read with the regulation as 120, where the CTR is to be filed. The second regulation which is required to file is the annual report. It has to be done within 4 months from the end of the financial year. It has to be prepared in accordance with the Indian GAAP system or any other system which you are making it, to be submitted to the regulator as well as to every investor within 15 days. If there is any request being made to give a physical copy, we'll have to adhere with that. The disclosure requirement, will be morely focusing on the angel at the moment. So regulation 24 will be an important thing, that as NAV is to be disclosed on a yearly basis, and you should also make that every year that you are making that your portfolio's investment is also been you're calculating the NAV. So as Mr. Samir also had informed that every startup or any venture companies you are investing will be taking the valuation report to calculate this. This is where this regulation becomes very important, that is clause 24. This is an immediate thing. It cannot be that you find anything which you have written in the PPM, which is written in your PPM, we'll have to provide that as well. The third requirement would be any other, that what is the holding you have kept in your each portfolios. You have any request being made? Say my investor has asked a question that what is the NAV of an X portfolio where he has invested. When such request has been made by such investor, the fund manager or the entity will have to adhere to give it within that 10 days time. So every month you will be doing this. In case there is a specific requirement from the investor, you will also adhere with that. Coming down to the SEZ compliance, primarily there are three compliance which is required to be made. One is the monthly performance report, which is to be filed within 5th of every month. That is, if it is for April, you will be filing it in May. If it is May, then it is subsequent that way. Service export points usually are not being made, but even if you are not having it, you will have to file a nil return in terms of the fund manager will, if he has raised any invoice, at that time, the invoice will have to be reported in the SCRF. And the third is the annual performance report, which is to be filed within 180 days from the end of the financial year in Form A, along to be certified by a chartered accountant. There is sometimes it happens that there is a lot of confusion when does it starts. So if my MPR is to be start from the date of LOA or whether from the date of my deemed commencement of business. What generally, I would not say that it will be starting from the deemed commencement of business. As soon as you got your LOA, your monthly performance report is mandatory. Whether you have started the operation or not, it's irrespective, but you will have to file the monthly performance report. Whether it is nil, yes, it is okay. But how many employees have been deployed in Gift City will have to be provided, and that is in terms of the count head. It is not that in case Shivram and Samir are sitting outside the GIFT City, whether they have to be reported, the answer is no. You still have to report it if they are a designated partners, though they may not be physically be present, but the head count of the people who are sitting there, plus the people who are outside and related to the entity or the fund manager, will have to also be reported. So it will be direct reporting of the head count, people who are sitting there. The indirect people would be probably like Shivram and Samir, who are outside the GIFT City, but there are maybe a principal officer or a compliance officer, etc., or maybe a person who is more marketing outside the GIFT City for getting the fundraised and all that. Service export, as I said, might not be applicable, but in case as an investment manager is raising an invoice, then it would be required to be filed. These are all in terms of dollars, so make sure that you will have to convert it into Indian rupees and then convert and provide the information. The more sometimes it happens, which currency should you consider, whether the RBI is to be considered or whether the CBDT. Our preference is always to go with the CBDT's notified rate, because the ministry is same, so it is better not to calculate it at what the RBI has provided. Every 10 days or 12 days, you get the CBDT's notified rate. So dollar, if it is dollarly, you have raised the invoice, then according to that. If it is a pound based, then it would be pound based. APR is the consolidated of what you have prepared as the monthly performance report. So you will have to provide each and every data, so it should not be a mismatch. Plus, this is also certified of what the FDI has come into the entity or the unit per se. So APR and certified to be a chartered accountant. One another key consideration which I would put is once you get your GST, you will also require to get your IEC code. We have seen that sometimes it happens in your SEZ portal that your the IEC is not updated. So the SEZ portal has given you that facility, so you can actually update it by way of a free form. The description of the form is free form, and once you upload your IEC, you will be able to get it your IEC updated in the portal. And if there is a compliance which has not been made, you are able to do it. I've seen that SCRF will not be able to upload it till the IEC is not updated. So therefore, it's someone has that difficulty that is resolved. By updating your IEC, you will be able to continue with your SCRF forms. The third aspect, which a lot of people have asked, is whether SCRF will have to be considered from the date of LOA or from the date of commencement of business. The answer to that question would be that SCRF will be considered from the date of commencement of business and not from the date of LOA. And the third is also on the aspect of APR, which I've seen a lot of people are asking that questions, is whether from deemed commencement of business or from the date of the registration date. The answer is again, because the commencement will start and the financial year will start from that date. So your APR would start from the date of commencement. So every year you will have to get that. A new requirement that every entity who is in GIFT City will have to make sure that they are registered under the Gujarat Shops and Establishment. There are two particular forms which are there. One is in case if you have more than 10 employees as your workflow, and the second is if it is less than 10. Declaration in terms of Form D, it is declaration. In terms of exceeding 10, it is Form A. It's a very simple form which is required to be filed by the entities who are getting registered there. And once you get that, you will be able to put the timings or which will be the working days, which will be the off dates, the statutory compliance as we do it in a domestic site that a particular entity is getting incorporated. PMLA registrations, MLA registration, gifts, FinTech, FinGate 2.0 is required to be mandatory, because you can't have any fund which you have received is required to get that honesty where the fund has been deployed from. So both registrations are mandatory, and the compliance which is required to be, IFTA is very particular on that. I would suggest everyone who, there are a lot of people who are also getting difficulty in their registration. Make sure that the user manuals which is provided by the regulator is amply being provided and gets resolved. I have seen there is a lot of questions coming from there that my registration is not getting done because of a proper system not being made. Get registration, you would have systems devised. So make sure that the systems which you are going to use at the GIFT City are the systems and not the system of an officer who's sitting outside GIFT City and it has been enabled there. You will not be allowed to take your systems outside the GIFT City since it's an SEZ zone. So you'll have to also make sure that you have been properly custom clearance to document, and also that particular forms of ID cards are required to be done. And you make sure that the system which is there in the GIFT City utilized there, because that the information will also be going in your APRs. And I'm sorry, MPRs. So you will have to make sure that the systems are getting managed and you are easily able to identify that the adherence of the build is made, rather making it as hassle-free and identifying where to build that system. One important question is what we always get is FEMA exempted or not? The answer is any unit who is in GIFT City would be exempted if it is an incorporated entity. In case it is a branch office, they're still exempted, but the compliance of the ODI or the NDI rules will have to be adhered by the domestic side. So any entity who is in GIFT City would be exempted from FEMA. But only carve out from this is that if it is a branch office, the domestic side will have to make sure that it is not more than 2 layers of subsidiary, and the Companies Act requirement will start following. I think I missed one of the portions on the valuations which is required, or the policies which is required to be prepared by the entities therein. What I would say is it is not, as Mr. Samir also informed, that it's not just simply as a ChatGPT or you do it or any other some AI tool. Make sure that you are following that regulation properly, whether it is policy of valuation policy or whether it's a gift policy. At the outset, gift is not accepted. So I can't have any, and I will not have any biasness by any people. I have to be very neutral. So that kind of a word which is placed in the regulation should be there, rather just using some random words which cannot be accepted. One last thing which I have always felt is once the investors are onboarded, I've seen how to make that compliance. There's one basic problem when you are incorporating an investment manager there, you don't get the desired name. There is a problem with the MCA portal. Everyone knows about it. There is some glitch which happens. The name which we desire do not get approved. So make sure that when you are filing the run application at the MCA, you're clicking at the IFFC as the unit and not as a person who is incorporating as a new company. I'm sorry, as a new company, and then you are enrolling that into rolling into IFFC. The second is you will have to mention the word IFFC if you are incorporating there. And we have seen a lot of rejections coming from that side. Regulator is so proactive and so helpful in that way that they have given a mechanism also that in case such kind of a resubmission has been issued by the ministry, you could specifically provide it to the regulator, and they will be helping you to get that design in terms of if there is a rejection per se, if on the terms that not conflicting. So it should not happen that you go to the regulator stating that I have not got this name registered. It's not that way, but it would be like, because of the word you had specified had IFFC, because you're getting incorporated there, but the procedure became so low that you're not able to get the name that way. But conflicting names, if it is there, obviously even the regulator will not help you. So please don't take it that way, that if my name is getting rejected, you can definitely go to the regulator. It is in terms of a facilitation given by the center. If your name is being stuck for a longer period of time, you can simply give him the intimation that this name which you have applied, and this is the SRN, that is a service request form which is being filed with MCA. And this is the error which we have got. And if that error is solvable, then your name should be or probably would get approved. This is second requirement. The third requirement that we always get this information that since we don't have a physical office, we yet to get. So once the lease deed is done, yes, you get an exemption under the Companies Act. So if you're IPO registered under the unit of IFFC, you will get some relaxation in filing a commencement of form. So it is not that you will have to immediately file it. You get some relaxation if you're a unit there. Similar relaxation is also provided in the LLP Act. The last slide, I would take it as my concluding mark as to build is to consider the word aim, that is to align with the regulation, that is whether it is the FM regulations or the GST registration. So you will have your form filings of GST, that is GSTR 1, 3B. You make a full alignment. And in case you are making an investment outside India, since it will become a offshore jurisdiction for you. So that requirement, if you are required to be fulfilled, you will have to first make that alignment. Second, make that important thing of implementing the controls. So if you are an entity, yes, you will have to make that one PO or one CO. That is whether one principal officer who is physically present in GIFT City, one and compliance officer will make sure that the implementations of your robust mechanism, which you will be creating as a build, you're floating it into an implementation, not just on papers. So you make that safeguards internally also, give align, make a checker role, what you have it in the SEZ system, that you have one maker and one approver. Similarly, you can always keep for your all compliance related persons also, you can delegate it. Third, continuous mechanism, that would stand as M and you will end as aim. You will have to make that you are continuously monitoring the process, detecting it, and you're actually preventing that there's no non-compliance of any of the regulations. Keeping the system in a robust way and keeping the skin in the game. That would be my part of my presentation, and thank you. Over to Jaya. Thanks.
Thank you for such a insightful session, sirs. I would request the participants to please write their questions in the chat box.
So, Jaya, till the time we have questions from the participants, so I would just tell what generally people want to know and what are the things which
Awesome.
most of the people would like to know. So those who are here and who want to set up things in GIFT City, first of all, the most of the people who want to set up in GIFT City, they are those people who would like to know what I will get if I set up a fund in GIFT City, the fund manager, the investment managers. So the investment manager, whoever want to set up in GIFT City, usko kya fayda hai? For those, I would tell that in GIFT City, there is no tax for 10 years. For a block of 10 years out of 15 years, you will have no taxes. So now what happens? The investment managers who set up a fund, let's say 100 million fund, and he charges 2.5% as an expense annually. So it means the investment manager is charging 2.5 million out of 100 million every year to the fund. And that money which you are charging in GIFT City as a fee is tax free. Had this fund be anywhere in India or any other jurisdiction, you would have paid taxes on your professional fee or the fee which you get. So now, if you set up a 100 million fund in GIFT City and your annual fee out of coming it is 2.5 million, it can be tax free. So that is the biggest, for the investment manager to see in setting up their funds anywhere in the jurisdiction, consider GIFT City for setting up their. And even if the investment manager is located in India and your LLP and your investment management entity is set up as an LLP and you are a partner to that, then again there is no tax in GIFT City, and as a partner you again have if you bring it in India also, then also you are tax free because LLP is taxed at company level, LLP level. So that's a huge advantage many of the investment managers, they would ask, if I set up in GIFT City, what is benefit to? This is one of the biggest benefit. No, and if the fund is of a very large size, there is a huge amount of fees which you take on investment part of it, investment fees or expenses or carry, whatever you are getting, that is tax free. All business income you will get as a tax free. So that is one of the biggest advantage to the people who want to set up, who should look at GIFT City in setting up the fund. So this was one of the things which generally people would like to know, Mera kya, if I set up. And another thing people would like to know, how much time it would take to put everything in place and what would be the cost. So it would depend. I mean, the open forum is not the place to talk about the costing and all those things. If somebody is interested, they may approach our GIFT City office or any of us. So I'll let you know what are the ranges of a GIFT City, of the fee and the timelines involved in setting up a fund. Okay. So I think we do not have at the question, Jay, at the moment. So we have already over an hour time, and I thank you from my side, all the participants and Shiv and Jay for this webinar. Over to you, Jay, and we can conclude this webinar. Thank you.
So thank you all for joining us today for this session on structuring of Angel Fund in GIFT City. We hope it provided you with insightful and useful information into the legal and regulatory framework surrounding angel funds in GIFT City. A special thanks to our speakers, Mr. Samir Rastogi and Mr. Shivran Ganeshan, for their valuable inputs. We appreciate your time and participation, sirs. Looking forward to see you again in our next webinar. Thank you so much.
Thank you.
Thank you. As India Juris, we aim to be the best place for the lawyers to work in and set up standards for the lawyers to develop their skills being in this law firm. We aim to provide high standard of international legal services to our international, global and domestic clients.
India Juris is having innovative strategies with regard to intellectual property rights disputes as well as international dispute resolution. And we are having a lot of milestones which we have achieved and about to achieve.
At India Juris, as a full-fledged law firm, we are advising corporates, startups for their advice on IPOs and further transactional matters.